As we broke down over the weekend, number one, volume was light. Number two, it was a risk-on period because of the AI bubble and the AI craze. We went right back to that trend line on the charts, and then we pulled back here. Now, again, what I'm watching for is, do we take out 25,870? That is the lowest point in the last couple weeks. Two hits, one here and one here. Okay? If we take that out, then you drop likely down just below 24,000.
After jumping to $28,000 last Monday, Bitcoin fell again to $27,000. The market still looks undecided without a clear direction, probably due to the lack of news and regulation. If we look at the Fear and Greed Index, it remains neutral, with no significant changes happening since last month. So it shows retail investors are not leaning strongly either up or down, but waiting to see what happens next. By the way, are you one of those still trying to figure out what to do now? Let us know in the comments below. Meanwhile, Gareth Soloway from InTheMoneyStocks.com and VerifiedInvestingCrypto.com has been calling for a drop in Bitcoin for a while, and now he even has clear targets for what's about to happen. And we're not talking about the lows he's been calling for a while, like 9 or 12K. We're talking about targets coming in a few days where Gareth is going long or short to make some more profits from this asset. So pay close attention, as in this video, you will hear from the man and the myth himself where his new trade setups will be.
I'm going to show you some charts that will blow your mind. In fact, that's one of the main purposes I want to bring to these game plans. Things where you guys will never hear it on CNBC, on Bloomberg, or anywhere else on the internet. I want to bring you that information to help you get an edge in everything you want to trade. So let's talk a little bit about the debt ceiling. Last weekend, that was a holiday weekend here in the United States. We know that Monday the markets were closed, at least for stocks and commodities. There were some futures trading. Futures did trade accordingly till 1 p.m. Eastern time. But basically the bottom line was that we had a day where the markets were closed but reacting to the debt ceiling news. And again, just for anyone who's been out of the loop, McCarthy and Biden came out and they basically said we have a decision on, or an agreement on, the debt ceiling. It still has to be voted on by Congress, by the Senate, by the House, but ultimately it's expected to pass. Now, if you looked at the markets yesterday, we opened higher and then we kind of sold off. Tech was strong. Why? Because of the AI insanity. And talk about insanity, folks. And I want you to use this to start to shape your minds to avoid the hype. All right, now what I mean by that is that if you look back at past periods where there was insanity in the markets and you were seeing stocks going up 50, 100, 200, 300%, if you bought towards the higher end after they had already rallied, 9 out of 10, maybe 99 out of 100 people ended up losing money. So in this AI craze, if you look at something like NVIDIA, it's up from $100 to over $400. Think about that. Yes, AI is sexy. It's important. It's going to be game-changing. But you know what else was game-changing? The dot-com revolution, the internet. And if you go back to 1999, think about what happened there. All these stocks ran up hundreds of percentage points, and then I would say at least half of them went out of business. In addition, a bunch of them got acquired for pennies on the dollar, and then some survived, but their prices got cut by 90% before they moved higher. Example, Amazon. Amazon was a great example of this, where you ultimately had it dropping 90+% from its highs in the dot-com era down to like $6, and then it proceeded to go much, much higher, gaining thousands of percentage points. So my point is this, is that the hype out there is real, but it is not something you want to get caught up in.
That is a tremendous piece of advice from Gareth. But unfortunately, even though he is talking about the hype on AI and new technologies, we see hype like this happening all the time in crypto. For example, with meme coins where people want to jump in for a quick profit. Still, most often than not, these will either drop massively or stop going up suddenly, and people who jump late get truly hurt. So be careful. Don't buy the hype and make informed decisions on what to do. Now check the latest Gareth's Bitcoin price prediction.
One of the things, and I always tie crypto to stocks, is because they are risk assets. We know that, right? Eventually, I truly believe in Bitcoin, and I believe it's the digital gold of the future. But right now, it's not. And I say this all the time, is that it started in 2009, we're in 2023. It is a 14-year-old, right? Are 14-year-olds logical? Are they digital gold? Are they like the place you run to for safety? No. They're adolescents. They're off the wall. They're volatile. They're risk assets. That's what you have here. Now, if we look at this chart, Bitcoin topped in 2017 on December 17th. 4 to 6 weeks later, the stock market, the S&P topped. Okay? So right there, that's number one. Now, let's go to this chart. In 2021, on November 10th, Bitcoin topped. 4 to 6 weeks later, the S&P topped as well. All right, boom. So you guys are starting to see a theme. And this is, by the way, this is what real technicians do. They look at the nuances of the chart. They find similarities. And one of the things that us as pros do, we don't put all our eggs in one basket. It's just because of this, it doesn't make me say, oh, well, you know, Bitcoin topped 4 to 6 weeks ago, so it 100% has to be. But what it does is it tells me probabilities, right? Probabilities are everything here, guys. So what we're going to do now, I want to just show you this. We're going to go to the Bitcoin chart, and I'll analyze it obviously shortly, and we're going to go to some other charts. But here's your Bitcoin daily chart. All right? In mid-April, we made the high. Okay? Now, where is the S&P 500? Let's look at the SPX here. The SPX, short term, possibly just made a high 4 to 6 weeks later. We're going to find out, obviously, over the next couple weeks if that's the case, if this follows the Bitcoin model. We're going to obviously keep an eye on that. But I just wanted to show you that, is that there are these trends, there are these similarities between cycles. These cycles work, and they generally, if not repeat, they rhyme, is because do you know who's trading all of this stuff? People. Emotion, greed, and fear. So the greed and fear, the greed that was in the dot-com bubble in 99 was the same greed emotion that was in 2007 and the same greed emotion in 2021. So if you understand that, again, charts are replications of humans trading via emotion, it starts to make sense why history tends to rhyme, if not repeat. Bitcoin, again, you guys know I've been steadfast. I think personally 30,500 is the short-term top. I still am not convinced we're out of the bear market yet. I think that people that say we're out of the bear market are slightly jaded by hopes and dreams. I look at the charts. As long as we haven't taken out 30,500 and stayed above it, I'm in the camp that this is still going to come back down. All right, we did fall back there. We fell below it, okay? Now, notice how as we broke down over the weekend, number one, volume was light. Number two, it was a risk-on period because of the AI bubble and the AI craze. We went right back to that trend line on the charts, and then we pulled back here. Now, again, what I'm watching for is, do we take out 25,870? That is the lowest point in the last couple weeks. 2 hits, one here and one here. Okay? If we take that out, then you drop likely down just below 24,000. 24,000 is your short-term target. Now, let's be clear. I'm a trader. All right? I have a short signal out in verified investing crypto. With Bitcoin, we're in the money. We're in the money on the Ethereum short. I would probably be covering my short right in this area. Okay? I might even flip it to a long for a quick trade. But a reminder out there. I'm telling you again what I likely will do. And number two is that I'm a short-term trader. So if I do decide to go long around 23,500, 23,007, then I would look for a bounce and I would exit. Because again, being a trader, you can be short-term bearish but still take longs, and you could be long-term bullish and still take shorts. Like, it doesn't matter. You're trading the levels. You're trading probabilities. And by the way, the most freeing thing in the world is to trade inside of bigger cycles. So many people are like, oh, I'm only long or this or that. Okay, I'm okay with that. Again, especially for people that can't study charts, but there is a wealth of information that the charts give you that essentially can help you make money in bull markets, in bear markets, even when you're going counter trend, even going long in a bear market, even going short in a bull market.
Are you taking any trades on Bitcoin now? Going long or short? Or are you just waiting to see what happens next? Let us know in the comments below. And if you want to see more curated daily crypto content like this, please leave a like and subscribe. Thank you for watching.